Story of the week has to be Bitcoin breaking through key resistance to hit fresh all-time highs. We almost tagged $120,000 yesterday. Spoiler alert, I've got a price target for you guys as we get into the charts. But never before in my time in crypto have I seen a breakout quite like this that happened on such subdued sentiment and trading volume. It's truly a new era for the asset, and the macro, on-chain, and indicator data all have me thinking that we could be in for a very special second half of the year. That aside, the S&P 500 and the Nasdaq printed new all-time weekly high closes today, and silver finally broke out from its consolidation to print fresh 14-year highs. This truly has been Christmas in July, as we say in markets. Additionally, the US reported its first monthly surplus since 2005 today, and Trump is calling for a 3 basis point rate cut, which would be the highest in history. Simultaneously, some insiders are signaling that Jerome Powell may soon resign. What a setup that would be for risk assets. So join me as we dive into the charts for stocks, commodities, and crypto to see what we can expect as we move into earnings season next week. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all enjoyed the pump this week. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the channel, and it gets this content out there to more people. And since it was such a stellar week, let me know what your best performing asset was this week. If there's confluence amongst what you guys are trading, and it's a chart I'm not covering, I'll add it to the rotation every week. On breakout weeks like this, we need to zoom out because moments like this don't happen often, and we need to be ready to act to take advantage of them. As the old saying goes, the markets spend 80% of their time figuring out which way they want to go and just 20% of the time getting there. And we're currently in that very special 20% of the getting there phase. I'm going to go over a few less individual charts today to really focus in on the macro analysis of Bitcoin and the S&P 500. But I will bring back some old names like ETH, which has been breaking out this week and outperforming. It's looking strong. And I'll also integrate some new sectors and individual charts to watch for interesting setups. So let's get into the charts. Okay, starting on the S&P 500, and although we had a very positive week for a lot of the names that we talk about here, the general S&P 500 was consolidating a bit this week after a couple of very strong weeks, figuring out which way it wants to move. And that's even more evident on the weekly chart. Whenever you have a candle like this, that's a bit of a top with just wicks on either end, with our opening price for the week and the closing price for the week very even, that just signals indecision. So we're looking to next week to figure out where these markets are going to go. And next week on the 15th marks the start of earnings season for a lot of the important names that can really move the market. So we're looking for that to see if these markets can continue their rally. But I would just put your mind on this not going up forever. We are eventually going to see some consolidation, and eventually we will see a correction. We talked about that earlier in the week, and we need to be ready for that, and we need to have a plan. So just quickly to go back to what we discussed on Monday, when we do have that correction right now, if it's in this zone, we're anticipating a lot of support coming in that 5,800 zone on the S&P 500, where all these moving averages are converging. And if it is a bigger pullback, we've seen bounces off the 20-week moving average, which is this pink line here. So that's a great one to keep on your charts. But on weeks like this, especially as we're closing 2 weeks now in all-time high territory for the S&P 500, we need to zoom out. And here I am on the weekly chart going all the way back to 2009 to the bottom of the GFC crash. And we have this trend line overhead that's been a bit of overhead resistance for the market. And I've seen a lot of people online actually this week draw a trend line a little bit differently. I don't know how exactly they're getting there, but it kind of intersects with the tops like this, and they're saying, oh, we might soon hit that resistance on the S&P 500. But I think the more valuable way to look at this is for this entire 14-year run up that we've had to give ourselves some overhead targets that we could expect towards the end of this run. And if we zoom into this to just let's target the fall of this year. So if we're talking about November, December right there, that would put this overhead trend line at about 7,500 on the S&P 500. So if we have a bit of a parabolic run this year, if the AI hype continues, that would be a zone to look out for. Or if that happens at a later date, just extend this line out and anticipate that as a bit of resistance as we get into it. If we break through it, that would be a very different story, but That, I imagine, would be some kind of bubble akin to .com or something like that if we accelerate at that kind of clip. You'll see we had a strong week for the dollar, trying to recover some ground from that key support at 96.4, and we got all the way back up to almost 98 on the US dollar. But right now we are into this resistance from the Confluence model center cloud, which again is just pulled from moving averages, and you can see how these peaks are very much respected by the moving average as well as these drops down here. We are still targeting a downside target on the dollar at 94.6 for a continued breakdown. And if we get those aforementioned rate cuts in the intro, I think that would really be the catalyst to send the dollar lower. Looking to gold, we are still consolidating right around the 50% of this range. And as we said in early April that this was most likely the top, a lot of you have said, well, how did you know that was the top? It was just the acceleration of this move. We've talked about this on MicroStrategy and other names, but you can see how the clip is moving at one pace and then accelerates at a greater clip just in terms of the angle of the move, and also the size of the candles is much larger. And then this is a standard topping candle where price pushes up to a euphoric high and it's overcome by selling with this high wick at the top. So just given the timing and the proximity to our price targets, this felt like a top. And the most common pattern in markets, as we've often discussed, is consolidation or correction and then impulsive moves. So you'll see consolidation, and now gold is figuring out what the next impulsive move is going to be. If we get into a risk-off environment, gold would obviously do well. If we continue into a risk-on environment, gold would then necessarily weaken, and maybe we find support again around that $3,000 an ounce. If we go over to silver, you can see on silver we had that breakout from consolidation this week, and I'm still targeting at the low end that $40 to even up to $45. You may be asking, well, why is silver rallying when gold is consolidating? Why is this breaking out? Well, it's more of a utility metal, and historically, silver plays a bit of catch up to gold. So if this ever happens in the future and you see gold make a run, or if you see gold drop, I would say on the drops, silver reacts in tandem a bit more precisely with gold. But on the runs that gold makes, once gold cools off, it can be a smart play to target silver for a breakout, and that'll usually come a few weeks after gold. Moving on to Bitcoin, and you can see the impressive breakout we have here, and we'll get to the price targets, but I just want to talk about breakouts and particularly fourth time breakouts from resistance. And I'm going to highlight this a lot on the chart today. And we've often talked about how trend lines will play support and you need 3 touch points for them to be valid. Well, and the probabilities of a rejection are highest for the third touch point. So you have the first 2 trends that establish your line, and then you're looking for it to validate by that rejection on the third one. And then the fourth attempt has the highest probability of breaking through. And whenever you break through on a fourth attempt on a trend line, the move is more meaningful. And the move is relative to the time frame. And we've got multiple fourth time breakouts happening here. So we obviously have this on the daily, which has transpired over, 48 bars, so roughly a month and a half. And then if we zoom out a little bit to bring in our previous price action, look at this trend line over the top. And we've got the same thing playing out here. Touch point 1, 2, 3. And then our fourth time breakout. So this, having occurred over the last 8 months, is telling me that this is going to be a much stronger breakout than it would be if we were just focusing on this month and a half period right here. But we can take this even one step further for Bitcoin. If we go here to the weekly chart, you can see that we're looking all the way back to the bull market of 2021. And what do you notice here? We have the same thing. 1, 2, 3, and now we're attempting number 4. So this being a fourth time breakout on a daily basis and then on a weekly basis, and this I'm considering on a monthly basis, even though we're on the weekly chart right now, is a very powerful fourth time breakout. Now we need to see this confirm on the weekly candle close, and that breakout range is roughly around 113,500. So watch that number on the charts to see if we get that really strong weekly candle close. If we're looking to the near-term price action, the one thing I like to see on breakouts is 3 daily candle closes above the breakout zone. And right now we have that for our breakout here, which I misspoke earlier is actually at 110,500. This one was at 112,000. So we've had 2 daily candle closes, and now Saturday will be our 3rd daily candle. So watch this for a 3rd daily candle close. And this confirmation signal, I like it for breakouts, and I also like it for marking bottoms and tops. And right here on the bottom, on the 22nd of June, we had 3 green daily candles, which normally signals a longer term, more meaningful turnaround. And you might say, well, look, you have 4 green candles here. Well, it's not just about green candles, it's about 3 up bars. And this candle here is what's called an inside bar. So the body of the candle fits inside this other bar here. It doesn't count as an up bar. You only have 3 up bars here, not going off the bottom. So there's a bit of nuance to it, and this works in inverse off the top. So in early December, when we hit those highs, we had 3 red candles, which marked an end to that uptrend. So this simple signal, if you know how to apply it correctly, can really give you a lead on turnaround points, but don't worry, I'll keep covering it for you guys here. Now, because we need to keep our mind open for both sides of the market, a sign of weakness would be if we come down and if we still consolidate between this 110,500 and this upper zone, that would still be okay, but I would want to see a bounce. But if we start closing daily candles below this 110,500, that would be a sign of weakness. Once you have a breakout zone established like this, closing back below it is not a great sign of strength. And closing back below this more macro breakout is also not a great sign of strength on the larger time frames. If we close back below this and bounce from here, we could still have an okay run, but really the best sign of strength if we do have a pullback would be bouncing from this zone and continuing on up. Now, we spent a bit of time on Bitcoin, but the last thing we need to get to is price targets, because I talked about those at the beginning. And right now for this move, because breakouts like this we know can lead to an impulsive move, but eventually the charts need to cool off and we're going to get some correction. And right now I'm targeting around 136,000, just underneath 135,500. And you might be wondering, well, how are you getting that price and time extension? I'm simply taking the previous move and this swing top that we broke. So when we break a local swing, you can assume an extension of that previous swing at least is going to happen in the next move within as much time. So this is our minimum target for this move. Ideally, if the trend is strengthening, we would hit that price target sooner. So you would have an extension in time and you would exceed it. But the conservative price target here, let's say, is 136,000. If you want to be really conservative and say you're zooming out more, you could take the price extension from the move up in December and you could project that, and that would put you at 130,000 just underneath. So anywhere in that zone, I would say is a fairly safe target. But because we have the 50% of that range coming in right at $120,000, and that's also a psychological level that a lot of folks have been talking about, I could imagine us, get up there this weekend, but maybe we consolidate just a little bit before attempting that next move up to the top of the range. So let's see how this plays out. I will say that while price projections can be fun, they're not something you want to be married to. Ultimately, price action and what the chart is doing should lead the way. Price is king. And this, as well as say analysis, what we did to mark this bottom here, which played out perfectly in this instance, they should just be a guide for either looking for turnaround points or zones as a target for that next price move. But we always have to be ready to adapt, and we need to let the price action lead the way. Moving on to Solana, and I know I have a lot going on in this chart, but I promise it's worth it because we need to talk about all the targets and levels, and I'll delete this Fibonacci level in just a moment, but I think it's important just to get us to recognize the importance of previous zones. So we had this wedge pattern that we were in for the last week, and we broke out, and the price target for that was at $164, and we hit that perfectly and then pushed through the 200-day moving average a little bit. There was a lot of hype behind this move. So again, price targets are just a guide, but this gave us a very good zone to target a turnaround. And you can see most of that price action happened right there. And now we broke down a little bit, and we are testing that 200-day moving average and the breakout from our range, which is at that $163 and change, as resistance. So we need to see if Solana can push through, and we have another overhead price target. This one was hit perfectly. And the other thing I'll mention, because we keep talking about fourth time breakouts, even on wedge patterns like this, you can see we had 3 retests on the bottom end. If we would have had a fourth retest, that would have a high probability of breaking out. But we also had the 1, 2, 3, and then 4 right here. As we broke out, back tested that for support. We know Solana's manipulated, so it gets pushed a little bit past support to wipe out stops. We talked about that with the 50% earlier in the week, but just watch out for that on assets like Solana. And then we still have the price target from the inverse head and shoulders off the bottom, and the target for that is $170. So I'm trying to map out the next few steps. And if we look at the daily RSI, you can see that the daily RSI still has room to run. So we're assuming the uptrend is not yet over. The 4-hour RSI, however, did peak locally, and it's cooling off a little bit. So we could anticipate, as we move into the weekend, a bit more cool off for this level. And then we would be asking ourselves, well, where would we naturally find support if we do come back down? And again, these price targets are just zones to anticipate a bounce, and they are not a golden rule. We always have to adapt to what's going on. And you can see I have these 3 dotted lines here, and these are actually where I have limit orders for perp longs. And so I've got my first one at 159.27, and the reason is because we have those previous peaks right here on this consolidation range. And the next one here I have at 158, which happens to be the 50% level from our local high. So I'm anticipating support there. And then I've got one more, which I don't think will necessarily tag, but I always like to keep a runner, at 156.15, which corresponds to these previous peaks and the highest point in our wedge that we broke out from. So if we correct to any of these zones, what that would be doing for us, it would just be confirming them as support, assuming we hit these. It would reset the RSI on the 4-hour. Obviously, the 1 hour and 30 minute would be reset and would have more room to run. And then we would head up to our 170 range, and perhaps we exceeded a little bit. But what I'm anticipating for the next steps would be then we have another move up. We need to cool off a little bit. Hopefully, we then either backtest this yellow trend line or the 200-day moving average, which would come into this zone here as support. And then we move up to be able to tackle that $180 overhead resistance, which is actually more of a zone between, I have it drawn out between 174 all the way up to 182, and this is the midline of that at 179. So this is really the area that we've struggled with our past highs here. And if we go back in time, you can see just how tons of peaks and bottoms have been formed in this zone right here. And if we can make our way above that, then we have the 50% from the all-time high at 195 and the psychological 200. After that, I would anticipate a little smoother sailing, but Solana still has a fair bit of work to do, and thankfully the trend is at least looking strong. If we move on to Ethereum, it had a breakout from its consolidation zone, and it finally did it. It broke out decisively above the 50% level from its all-time highs to the bear market bottom. So that was one of our biggest overhead challenges that we talked about the last time we covered ETH at that $2,900 level. And now we have had 2 daily candle closes above that. Just like with Bitcoin breaking out, we want to see 3 daily candle closes to confirm that. The one thing that we need to look out for right now, this move is getting a little bit extended. We have 7 bars up in this swing, and anytime you get 7 to 9 bars in any one direction, it increases the odds of a sharper correction back down the other way. So ideally, this doesn't extend to 9 bars or above, because that would indicate that we would just get a sharp move back down, hopefully test the 50% for support, and then move away. What I would rather see for Ethereum is a bit of correction and a more gradual stair step up, as opposed to just accelerating out of the gate like this. I fear a lot of hype with Ethereum right now, right? But I fear that if we head up too quickly, that the hype could fade, something could happen that would send us back down, and it would be nice to see this be a more sustainable rally. If we are doing some price projections, just like we did for Bitcoin off of the last move up into the consolidation zone, and we just dropped that right here, a local target could be 3,400 and change. So in terms of levels overhead for Ethereum, know that 3,400 and then 4,300 after that are the major zones. So 3,400 corresponds to these past peaks right here. See all these past peaks in this zone right here. And whenever you draw a price target, either from a pattern or just a price and time extension like this, you want to ask yourself, does it make sense? Like Solana, it was going into the 200-day moving average, makes sense. Here, we're getting into a key level at that 3,400 for Ethereum, a lot of sense. And then the next zone above that would obviously be that 4,000 level where we had these local peaks, and that also happens to be one of our Fibonacci values. Then if we can break that zone, there is a little bit of stuff going on at 4,300 if we go back in history with this past peak right here. And that would be our last, I would say, major hurdle before trying to go up to test all-time highs. I'm going to Fartcoin real quick, not to do a deep dive and not just to mess with you guys saying what the H is he doing talking about Fartcoin again, but just to sharpen up the TA concepts that we've been talking about. And one of those is the fourth time breakout, third time resistance. So right now we've had this overhead resistance on Fartcoin, and you can see we have 0.1, 0.2, and now we came in for 0.3. And what this did for me is it gave me confidence to short, even though there was all this hype yesterday. So I've been in a short right now, and I'm targeting this 50% level for my next long at $1.22. And like I've said for a long time, I like Fartcoin because of how it respects the TA. And off of this next zone, assuming we bounce here, I would anticipate a stronger move on that fourth time breakout. And how am I getting that target of the $1.22 right there? Well, if we go in a little bit closer, let's just say on the 15-minute time frame, at the top here, we had a classic topping pattern of a head and shoulders, and the target for that is right here at the 50% level. So again, I'm not taking these patterns at face value in isolation. I am looking at them and saying, does the price target make sense? And right now, it appears that we are on a path to that as we've been making lower lows on the way down. And hopefully our charts would be fairly reset at this point, and we can bounce from this zone. The other thing that played out fairly well on this from a TA perspective is that we had a cup and handle pattern here on the breakout, where you have your neckline, you have your cup and your handle, which we know is a continuation pattern in an uptrend that we've been in since the 22nd of June. And the price target from that was right here at $1.35. So as soon as we broke out from this, it gave me confidence here also to go more aggressively long. And I got out of my position early, didn't nail the top, but we know that zones like this can often be magnets. So even though I got out here, it allowed me, once we started moving up, to enter another long and then sell out of that as we got into this resistance zone. So I'm obviously marrying this up with my standard TA and how I perp trade on the short time frames with the Confluence model clouds, which many of you have seen if you've been in one of my perp trading or TA classes. But all these little signals just give you leads on the market, and it almost feels like a little bit of a cheat code sometimes, because you can actually have some foresight into what's going to happen. And if the thing you predict isn't going to happen, that's a great signal for you too, because it tells you that you're wrong and there's weakness in the chart. And now you have to look to the other side of the market to what that target would be. And moving on to MicroStrategy, and here we are on the daily. You can see we still have room to run, and we just had a daily breakout, and we have that same cup and handle pattern that we were just discussing on Fartcoin. And like I said, it's a continuation pattern. So after this run up, we have the blow off top, and then we come back down to earth, and the buyers are still excited and they're trying to push the price up, and the sellers are coming in a key zone. And so the whole stock drops, finds support, in this case at the 200-day moving average, comes back up, and the sellers come in again at that same zone. And now it drops back down, but the buyers are stepping in at higher prices. And now we come back up, and can the sellers keep us down? We push through. And the reason these price targets work, and the reason the move can sometimes be a bit more explosive, is because there are so many people that have been shorting here that often it can lead to a bit of a short squeeze. I'm not saying we're going to shoot right up to this price target, but the price target from the cup and handle pattern, which, just to recap for those of you, you measure the bottom part of the cup to the neckline, then project it to your breakout candle there. And that target is getting us to $630. If we draw this neckline straight, it would be getting us to about 620. So 620, 630, I think is a great target for MicroStrategy. There were a lot of analysts that were saying MicroStrategy had its blow off top in the previous bull market before Bitcoin and never got to new all-time highs. This to me right now is really looking like it can reach for fresh all-time highs. And if we just look at the structure of the Confluence model cloud, it is right here on the daily, set up beautifully to begin expanding as that price action comes up and gets us to that target. And if we take a more aggressive time and price extension, this would be an overall price extension from the bottom of the bull market, which would be quite aggressive, but that would have us all the way up here at $730, the time target being January. But again, these moves happening later in the bull market should get to that price target or exceed it in a shorter number of days than the previous run took. So that would be the hopium target above 730 there, and then 630 is our more realistic near-term target for MicroStrategy. If we look to Tesla, we're just consolidating in this wedge on the 4-hour time frame. We've still got plenty of room to run up, and we found support at the bottom end of the wedge. So my assumption right now is that we run back up to the top end of the wedge to test that, and that would be at $350. And as we've been talking about these trend lines, that would be our third time retest, which has a higher probability of rejecting. So if I'm just mapping this out, assuming those things hold true, I would anticipate rejection, support, because that would be our third time on the bottom end, and then hopefully a breakthrough. We talked about that on Monday, why this more pulled out on a weekly time frame is really important that it breaks to the upside. We do have a little bit of resistance overhead right now with the 200-day moving average that we were fighting towards the end of the day here. It's also at that key $315 level, which has provided a lot of support and resistance for us in the past on Tesla. So we need to see what this can do. But right now, I'm assuming that we are going to go up. And outside of my long-term hold position, whenever we're in a pattern like this, I've been playing this short and long with TSLL on the long end, TSLQ on the short side. You don't want to hold those leveraged ETFs long because you get chopped up by the fees and they actually don't give you the 2x returns that you would anticipate over a long period of time. But for short trades over week to 2 weeks, as these swings play out, they can be a great vehicle for that. On to the pair trade, which is obviously still moving in the favor of MicroStrategy with Bitcoin breaking out. We had that huge spike, and then MicroStrategy came back down to earth a little bit this morning, so this has flattened out some. But overall, I would imagine that MicroStrategy is still going to pick up steam. It hasn't moved that much percentage-wise as you would anticipate with Bitcoin moving as much as it has. So I imagine MicroStrategy is going to pick up steam next week. But we are also saying that Tesla is going to move to that 350. So perhaps this continues in a bit more of a neutral fashion with a bit of an upward grind, since both assets we're anticipating are going to keep increasing in value over the near term. And then if Tesla hits that rejection, perhaps we get one more move for MicroStrategy. And speculating a little bit, maybe MicroStrategy has that run, hits our price target. Tesla is coming back down to the bottom of the range, has that bounce. We'll just have to take this one day at a time. I shouldn't speculate too much. Honestly, this chart is the perfect saying for the trend is your friend. Just trust the trend model and go with that, and you will have the highest success rate pair trading these two assets. Quickly to the fintech plays, because this has been the hottest sector outside of AI and semiconductors, and Coinbase broke out to fresh all-time highs to end the week. This coincided with the breakout in Bitcoin. Obviously, if Bitcoin and crypto are doing well, Coinbase is going to do well. So we have that higher long-term price target at $442. Let's just say $440. And it looks like we're going to hit that higher price target sooner than anticipated. I was thinking that we would most likely see a bit more consolidation. Normally after a big blow-off move like this, you get a bit of consolidation to let the charts cool off and for the market to find its footing before going on the next leg. It seems like we're getting there sooner than later. It's great if you're holding this asset. I would just watch out because, as we talked about just a bit ago, if these moves accelerate too quickly and we get very overextended on the daily timeframes on RSI and mean reversion, they will come back down to earth. And this can be a good zone to look out for to sell covered calls if we start getting these gap up opens on the daily and we start getting close to that price target. So just something to think about, not financial advice, because you have to weigh for yourself, do you want to sell covered calls and hold onto the stock, or do you think there's going to be another bear market in crypto, and is it better to just unload your position and move into something else? I can't make that decision for you, but these are all the things I'm thinking about when I'm either selling covered calls or I'm deciding to get out of a position. If we move over to Hood, it broke into new all-time highs this week too, but it's a little bit behind Coinbase because it is not a pure crypto play, so it didn't get quite as much of the momentum off of the Bitcoin pump, but I suspect this is still going to move. But our next overhead target is 110 to 115 for the extension. I honestly sold covered calls here too early. That was the price target from the breakout move, and there has just been so much momentum in this space that it has continued to run away from me. So I would have done better if I would have waited longer to sell those covered calls, but we can't see into the future. And I was sticking to my plan. The charts already looked overheated on the daily. We hit the price target. Luckily, I only did that with about 20% of my overall position. So I stuck to plan. I made some money off the covered calls. They have a long expiry, so we need to see if we'll come back down to earth and maybe I can get out of those, or perhaps I just give up some of my shares and it's a bit of forced profit taking. The last one in the fintech space that has been the laggard that we discussed on Monday, and I just got into position on this, is Webull, which had this crazy move on the IPO up to almost $80, then came back down to earth. And to recap, for those of you who didn't watch Monday's video, the reason I got into it was twofold. It was forming a solid base, so it was on my watch list. We found clear support, and this sector is very hyped right now. So it stands to reason that there might be some profit taking and rotation from Coinbase or Robinhood into this name. And the reason I got into it was because we had these two highs. Then we made our first higher low right here. We broke out with a higher high above this previous swing. And then we came back down and we've tested this previous zone now for support, and we've started bouncing away. And I am in my position and I am just watching this. If we break back down and close a daily candle below this breakout zone at $11.93, let's just say $12, that would be a sign for me to get out of my position and a sign of weakness again. If you close back within a previous zone that you've broken out from, and I'm just holding this right now through the fall to see what it can do. I imagine we'll need to see some earnings reports. We'll need to see some new product announcements. They just diluted a little bit here to be able to develop more product and integrate more crypto and different things. So we'll see if that comes through, in 3-6 months time, and that translates into the price moving up. And I'm not expecting it to get back up to 80, but even if we get up here to this local 50% at $21, I would be happy. And that's just from that little swing top here. The overall 50% from the 80 is at $30. So from an entry at about 11, not too bad. Okay, bringing up one that I don't talk about too much, but I brought it up when I got into it a few weeks ago, which is SMLR. And I got in at these lows here because this range has provided support. It was these previous tops from our consolidation range last year. And I figured if we were holding this, we would be forming more of a macro higher low. And if we broke down, I had my clear invalidation to get out of it. And it's been a nice move away so far. And this week, I sold just a little bit of my position because we were getting into this trend line, as we've talked about. Third time retests normally reject, and we saw that to end the week right there. So now I'm looking at my remaining position to see where it might bounce, and depending on where it bounces, I might reload. So the ideal scenario would be perhaps we find support here at the 50% level, which is why I have my alert set there at 42, and then we bounce away and break out of that line, or hopefully break out of that line. And as I've been saying this whole video, fourth time breakouts are normally more meaningful. And the other reason I sold, not just because of the trend line and the third time signal, I'm also looking at the moving average from the Confluence model cloud. And whenever the moving average on the top end of the cloud is coming in very steep like this, it is very rare that price action can just push through to reverse that. Normally this needs a moment to round out its bottom and then head back up. So that would work very well with this thesis of finding a base and then potentially breaking out in a few weeks' time. As you spend more time with the Confluence model, you will find that these narratives always repeat, where you're in an uptrend in the upper third, you have neutral consolidation in the middle, and then you get back into the upper third to move away. Or if you're in a downtrend, you have your uptrend, consolidation in the middle, downtrend, and then break back into more neutral territory. So it's not an exact thing that repeats picture perfectly each time, but as you go back in your charts and you look at how these three clouds interact, you'll see that repeating narrative, and it can give you a lead on what the price action is most likely going to do, as well as these levels playing support and resistance as a moving average. The other name that I haven't talked about in a while is SMCI, and this one I just wanted to bring up because it continues to show strength, just respecting this support level underneath. And right now we are just getting into a point where on the daily, the upper band of the Confluence model cloud is really starting to expand, and it looks like this one could really run. And I am looking for us, since we set a higher low here compared to these bottoms and compared to these bottoms back here, that if this is going to be a continuation of an uptrend, that we would break these previous highs at $66. So that would have us doing a move somewhat like this, and then perhaps we come back down and see if we can find support, and then if we're lucky, continue the move. That's a little bit too far to map out for me, but at least right now, I'm expecting that over the next few weeks and months that we will break that 66 level, and my ultimate target from an extension for this move is right here at 77. So I'm hoping we can get to that 77, and that's what I'm expecting just based on how the chart is looking right now. Again, though, we just need to take one day at a time and let price action lead the way for us. Okay, I'm going to do a rapid fire round on the Bitcoin treasuries, at least some of them. And right now, CEP is one to watch. We broke this downtrend and we broke away and now closed the week above our 50% of this range. So CEP is showing strength. The way the Confluence model cloud is looking, I don't think we would break through in the near term to test the all-time high. With how the cloud is moving, I think we would maybe chop around a little bit before moving away. But this one is definitely one to watch, and I am thankful that I got back into it on this breakout retest here. So we talk about this a lot. Trend line breaks out, gets back tested for support. This can be a very high confidence entry, and it did very well for me so far this week, and I'm just holding on to it because it held that 50%. If we look to Naka, this is one that I was warning about for the breakdown, and the price target for the breakdown here at $3 and let's just say 75 cents. These kinds of even wedge patterns, the price targets are the least reliable of any pattern I have back tested. And right now we saw a little bit of a breakout of this trend line and a back test for support. So I'm keeping my eye on Naka. It's been a little weaker. I haven't gotten back in on a position, but this could be one to watch to see if that support holds, and there's a lot of momentum in the space to see if it could break out. And if we're looking at the Confluence model cloud starting to squeeze, acts just like Bollinger Bands, that's telling us to soon expect a bit of volatility coming into this name. ASST, after that explosive move earlier this week, has been finding its footing. I had my first small limit order fill right here at $6.28 at that previous peak, but I'm still expecting a bit more downside to this 382 level at that $5.50. And I have another limit order set here. And if this is going to continue to show any strength, I would love to see us bounce there. But this is the majority of my limit order. And I would then put a stop order just a little bit below that, because if we break down, we could go back all the way down to this zone in the $4 range. And I don't want to leave that on the table. I would rather get stopped out with a little bit of a loss and have a chance to reload lower down. DFDV spent a bit longer this week consolidating, but then we had a strong move to end the week. We're on the 4-hour here, and we closed just right on the 50% level. So it's starting to show some signs of strength. But if we map out what we drew earlier in the week, this still holds true. We have this price target right here at 36, and then on a move down, we would like to see it bounce there to hold the 50% for support before continuing to move away. That's the ideal path of travel. But right now, because we're so close to the 50%, we really need to see next week if we can close a couple of daily candles above this and then continue to move away from there. The warning sign on the downside is that this support line down below, we've had 1, 2, not a retest, 3. So if we came down to test this a 4th time, that would be a sign to look out for a breakdown. With all these names, that's why we set our stops very tight, because they move by big percentages. They can be very volatile, which means they can be lucrative to the upside or they can wreck you to the downside. Again, with each of these names, they are 0.5% or 1% of my portfolio. They are nothing meaningful in the grand scheme of things. So even if they go to zero, it's not going to ruin me. Please don't put 80% of your holdings in these names because you might get wrecked. You might hit the lottery, but there's also a high chance that you could get wrecked. And last one that we talked about on Monday, which is KNW Labs. And we had that breakout, and now we've been sort of testing the 50% and chopping all around it. We did close the week above it, which is good, but it isn't really a definitive hold of this level. Normally, I would like to see more of a breakaway. We have a price target here of that $4.93. So I'm still doing great off my position here that we got on these 3 bars that formed a solid base on the bottom. But I'm watching this for a potential breakdown. I feel like I've said that with a lot of the names today, but hopefully with more hype coming into the crypto space, it will be a bit of a tailwind for all these names. But again, if you're in any of them, keep a sharp eye on the charts. Okay, last one for the treasury plays, which is UPXI. And I know James railed on this one when it dropped after earnings a couple of weeks ago. Well, I got into it just as a bit of a gamble because we were bottoming on all the charts. And right now, this has done really well. From my $3 and change entry to where we closed today at $5.50, I'm up almost 100%. And my target for a bounce like this on a massive drop would at least be that 50% zone. So that's $6.91. If we take it from all the way from this last swing top, that would actually be at $8. I only took about 20% off the table today because I'm like, these names are risky. I don't know what they're going to do. I should at least take some profits. And before you think I became a millionaire this week between the asset play and this gaining 100%, remember that this one in particular is like 0.5% of my portfolio in this one position. So I made a few $1,000 great, but it's not going to change my life. Still, I want to be disciplined about taking profits, and these kinds of plays to me are just a little added spice in the portfolio, and then I'm rotating those gains into longer term holds or plays with a bit more substance behind them. Okay, last one for the evening. I wanted to get into some of the quantum computing names like RGTI, QBTS, QUBT, because they are looking like they might be breaking out and going on another run, but there's plenty of time to cover those on Monday. I just wanted to cover OKLO because I got in an entry on this one. I was saying that it was looking a little bit toppy and I got out of my previous position here a few weeks ago. And now the charts on the 4-hour have reset and I was watching this falling wedge, and as we broke out of it and backtested it for support, I got in here at 53.60. So on this first backtest, we had a second one and we've started to move away. So it started to show some strength this week. I would really like to see us get a higher high than this 57.60 level. But if this breakout pattern holds true, we would get just above previous all-time highs at $75 or so. So another short-term swing trade. I have my invalidations down below this previous low to get out of my trade, and I have my target to the upside, which from the entry would be 40%. So not bad. And if you are playing this with call options, that can be extra lucrative. So you wouldn't want to do this with call options that expire in 2 years. You might want to say, well, I think this price target's going to get there by the fall or in the next month if you're wanting to take it a little riskier. And those short expiry call options can really gain in value for you and help your portfolio a lot. But please learn about options trading before you just dabble in it, because people who just play around in it and treat it a bit like gambling can definitely get wrecked. But if you know what you're doing, it can actually be a smart strategy. And I would recommend reaching out to someone like Jacob Invests in the community. He is really well versed in options and has great risk management strategies. He was in an options play on HIMS that he was able to roll down quite effectively when the price dropped. You have to do that right at the right moment. But anyway, if you know what you're doing with options, they can actually sometimes be a safer play than just holding spot. Well, that's it for the charts. Keep your eyes on crypto as we move into the weekend. We might have an exciting couple of days ahead, and I wouldn't be at all surprised to see us in the low $120,000 range by Sunday afternoon. However, we have to be ready for both sides of the market, and we need to see that weekly candle close at a minimum above the $112,000 breakout zone, and ideally above the macro trend breakout at about 113.5K. So have a good weekend. I look forward to seeing you guys on Monday to see how the markets kick off. Bye for now.